9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get your top stories today. Asian stocks under pressure while gold and Bitcoin are holding on to gains here. That's ahead of Kevin Warsh's first appearance as Fed chairman at Jackson Hole.
Traders brace for CXMT's first earnings test as a listed company. We're going to preview the results for the chip maker as well as China's large banks and EV industry leader BYD.
And we are speaking exclusively with the head of drug maker CanSino after it reported a jump in sales. We'll discuss the outlook for the industry following recent breakthroughs in mRNA vaccines.
Yeah, it's interesting that you're seeing even what happened with NVIDIA, right? When we saw one of the second largest moves ever in history here after those earnings is not really enough to continue the AI trade here today. I think markets are still on tenterhooks about Jackson Hole later on today. And what is Kevin Warsh going to say this time
Or what
around?
is he not going to say?
Or what is he not going to say?
Yeah.
The 30-year yield has gone up, 30 basis points since his first meeting, so the FOMC. It continues to get roiled here, despite what Scott Bessent is trying to do in the bond buying to kind of bring down the yields lower in the long end. But yes, there's going to be some key questions on what he needs to clarify, right? What is the reaction function of the Fed here? What could trigger them to raise rates at a time when the Fed itself, within the committee, is quite divided on inflation right now?
Yeah, what is the risk to the bond markets, right? And whether it is, what part of the angst in the bond markets does fall under the mandate of the Fed, or do they look at the fundamentals of the economy, which suggests yields should actually be higher, right? So I think we need to split the difference and really to figure out what that means. And I think to the NVIDIA story, perhaps why markets aren't really chasing the AI rally, NVIDIA maybe had to simply adjust because of the earnings, but everything else, of course, is leading into Jackson Hole. I think on price, though, while things are quiet and sideways, we've gone quiet on turnover, volumes to some extent, and expected vol. I think going into this big weekend where, coming out of this time on Monday, we'll certainly be unpacking what he said or what he didn't say and decipher really what markets then have to fill as far as the gap is concerned. The dollar, as you can see, is on softer footing. I think just to give you a sense of the drop in vol across the region. So I think later on when you look at Hong Kong, for example, yesterday into the close, going into the session today, Hang Seng Vol Index is now at the lowest level of 2026. VKOSPI, which is, of course, the similar measure for Korea, has come down quite substantially, hasn't quite retraced all the way down. We're still at 50 points on that, just to give you an indication. But it is somewhat indicative of markets and cross assets that are somewhat behaving themselves going into the session. A50 futures coming up on your screens. 10-year yield back above 1.7. The dollar is still in oversold terrain against the Chinese currency. The MOVE index is, of course, indicative as well there of the drop that we're seeing across vol on the Treasury space. VIX futures, as you can see, of course, indicative of the latter there as well. We are back below 15, 16, I believe, there on the actual VIX itself. But yes, it depends what they say, how they say it, and whether or not Pete does, of course, explicitly say anything around this Kevin Warsh.
And the Fed at the time, you're hearing some voices from the Fed itself, is that, they're still not sure. I mean, are rates restrictive enough right now to really bring down inflation, right? So that certainly is the key thing that we're going to be asking as well, our guests. Investors are waiting to hear, of course, from Kevin Warsh, the Fed chairman, when he takes the stage at Jackson Hole on Friday. And ahead of that, we did hear from Kansas City Fed President Jeff Schmidt arguing that rates may still need to go higher to get inflation back on track.
The last Q3, Q4 data for me last year was, I thought we certainly weren't restrictive and maybe even a little accommodative. So we've got work to do.
But not everyone at the Fed actually agrees. And I think this family feud, the split between where they think policy should be, you have some policymakers saying that rates are already helping to cool the economy. Now, with views split, effectively, that's the complexity we're faced with. Investors now will be watching for that speech of Kevin Warsh for answers. And Mike McKee, our international economics and policy correspondent, has the details and the context from Jackson Hole.
The new Fed chair takes center stage at the opening of the symposium Friday. Wall Street wants to know if he's ready for the spotlight. Kevin Warsh has been here before as a Fed governor during the financial crisis, but he wasn't the person investors looked to for guidance. Now he is, but so far he's failed to provide it. Warsh argues the central bank shouldn't steer Wall Street by telling investors what the Fed will do. He'd prefer to discuss the reforms that he hopes to bring to the Fed and the 5 task forces he's appointed to support them. Investors only want to know what the Fed could do, how he thinks about inflation, and how he plans to keep his promise to bring it down to 2%. Michael McKee, Bloomberg, Jackson Hole.
And the call from Bloomberg Economics is really, don't be evasive. Don't repeat what you did during the July meeting, right? Anna Wong, her team basically wrote this report as a preview, right? Where his Jackson Hole speech for Kevin Warsh comes against a difficult market backdrop. You have already uneasy about his reaction function. Investors want clarity on what inflation gauge Warsh will focus on. And of course, a time frame when they're going to return to target of 2%, which could trigger another hike. Warsh, though, she says, unlikely to provide it. And she says the risks to the bond market are probably skewed to the downside today, so towards a deeper Treasury sell-off.
Yeah, the path of least resistance is for yields to go up until maybe they tell us explicitly, not from the Treasury side, but from the Fed side, if they signal lower rates. I'm looking at pricing for the next Fed meeting in about 2.5 weeks from now. We've basically been at about a third probability of a hike at that meeting. Joining us now out of Dallas is Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. Danielle, good morning from the Asia Pacific. Good Thursday evening where you are. So should we expect anything out of the Fed chair? If so, what should we expect? And if he doesn't say anything, do you see the need for us to fill the gaps?
Well, I do agree with you that I think market participants are going to be very frustrated in the aftermath of what Kevin Warsh does not say in the morning in Jackson Hole. As far as he's concerned and his inflation task force, there's still too much divide in between what the official metric says, the core PCE at 3.3% year over year, and that of where I'm sitting, the Dallas Fed trimmed mean of 2.3% year over year. So we really are sitting in a situation where the inflation risk is undefined. In one sense, it's well above the Fed's 2% target. But we've heard from Kevin Warsh before that he prefers the trim mean metrics, and that's at 2.3% year over year. I think he's going to choose to continue with less is more, and in that sense, continue to frustrate traders and market participants.
And how does he get the communication? I mean, as you say, right, it's just going to confuse the market even more. How do you continue to push for less forward guidance at a time when there is a Fed within the committee itself that's quite divided on inflation without coming off as evasive, right? Is there anything that he can do in terms of restoring credibility on that part?
Well, I mean, he can possibly say, I've got a task force for this. He said it before. It only lasted for a hot minute, kind of like Treasury Secretary Scott Bessent's moves to try and bring the long end of the yield curve, yields on the yield curve down. We'll have to wait and see how more communicative Warsh is tomorrow morning, because if there was one signal that he sent off after the late July FOMC meeting, it was that he was trying to confuse the audience. He was trying to confuse listeners as opposed to clarify his stance. So he needs to be much more articulate about why he's being silent on forward guidance and moving forward, why that makes sense, because there are so many Federal Reserve district bank presidents who are being anything but silent in terms of their forward guidance.
What is okay, so let's take this at face value then, Danielle, and say this is a return to when look at the data first, ask me questions later. What does the data tell us now? Where should rates be?
Well, it depends on which data you're looking for. Again, what we saw with core PCE a few days ago was 3.3%. What we saw with the Dallas Fed trim mean was 2.3%. You can drive a Mack truck through that spread differential. And I think that that's part of what Warsh is trying to get to the bottom of, because we are continuing to see downside in year over year rents and year over year home prices here in the United States, the largest inputs to inflation metrics. They come with a very big lag in terms of manifesting themselves in the official data. But whether you're talking about Indeed.com wage tracker or other metrics of wages, we have seen them more than round trip back to where they were prior to the pandemic. Wage inflation, of course, is the largest input to the inflation that Warsh and any central banker is tracking, and that has been coming down. Remember, the Fed can only control inflation for discretionary purchases. It cannot control what's happening in the Strait of Hormuz. It cannot control three-year high wheat prices, thanks to what's happening with Ukraine and Russia, the ongoing conflict. There are only so many things that central bank policy can control, and it's Kevin Warsh's job at this juncture to articulate that.
So is this a Fed that's leaning more towards hikes than cuts or hold, Danielle? I mean, the market seems to be tilting more towards hikes now, with a 30-something% possibility of September seeing a hike as well. But the dots certainly seem to be leaning more hawkish. Are the dots sort of the next forward guidance we need to look at now?
Well, you know, the dots could be what we need to look to next. Of course, we're going to get another installment of those dots on September the 16th. On the other hand, Warsh has said that the dots may be short-lived. They may not be long for this world. And we've not seen a single Federal Reserve Board governor dissent or even say boo about what Warsh is saying. We've only seen District Reserve Bank presidents vocally dissenting against what Warsh's stance is. And I think as long as he has that coalition of permanent voting Federal Reserve Board governors, that he's going to stand his ground. So I actually believe that we're going to see a hold, not just in September, but for the rest of the year.
Okay, we touched on what Scott Bessent and that side of the room is doing. I want to get your thoughts on whether or not you think that works, whether you, I mean, certainly when you look at the absolute level on Treasury yields and the shape of the curve, it doesn't look like this is an economy that's slowing down. And I'm wondering whether Scott Bessent, they're simply trying to abstract maybe some of the premium and supply issues that are hounding the Treasury market. Effectively, what I want to ask is, do you think the exercise to cap yields will help, and do you think the Treasury curve is representative currently of the underlying economy?
So I think right now the Treasury curve is exaggerating the underlying health of the economy, given the disinflationary winds that we're seeing blowing. That said, you are absolutely correct. There is a ton of corporate bond market supply coming online, record levels here and in the months to come throughout the end of the year. And the term premium is sky high, as you note. So whether or not this is going to be effective, we will find out. Purchases don't begin until September the 9th. And whether or not Bessent has backed himself into a corner where he has to go from $2 billion to $4 billion a month to potentially $8 billion a month remains to be seen, because right now the bond market vigilantes have certainly called his bluff.
What does he have to do to reverse that? I mean, is it more about fiscal consolidation, as he mentioned? Or they really have to address the deficit concerns in order to kind of make this whole bond buying operation actually work?
Well, speaking as a tax-paying American, I certainly hope that we would be addressing the deficit and debt issues in the United States. I think that this foray of Treasury Secretary Scott Bessent is an attempt to avoid having that very adult discussion in Congress, which is a shame, because these are the issues that face the U.S. dollar, the U.S. Treasury as the world's risk-free asset in the long term, and they must be addressed today as opposed to kick down the road.
Danielle, always great to have you. Danielle DiMartino Booth there, CEO and Chief Strategist at QI Research. Coming up, we're set to get a slew of earnings out of China a little bit later on, including from chipmaker CXMT. We'll get you a breakdown and a preview. Coming up next, we're counting down the open of trade in Shanghai, Shenzhen, Hong Kong. This is The China Show. Happy Friday. All right. All roads lead to Jackson Hole here today, of course. That's why you're seeing volatility crash a bit here, just given that, right now we're just waiting on the sidelines on what we could hear from Kevin Warsh when it comes to what the Fed could do next. But then again, there's a lot of earnings, too, that we got to get through, right? It's earnings parade, as Dave and I were talking about. So Akeso, China Life, China Wanka did report. We're also watching likes of BYD among the EV sector, chips like CXMT, crypto as well, now that we're back above 80,000. And there is a big Bitcoin Asia conference in Hong Kong, which wraps up today. We're expecting some hotel occupancy numbers from Macau, and of course, it's earnings, Dave.
At least $3.5 trillion reporting today. That could go higher based on if others, of course, fall within the Friday going into the weekend. But suffice to say, there's lots to get into as far as this is today, and of course, the reaction will be on Monday. But yes, so we could see, of course, one of the bigger ones, CXMT. Apart from that, we've had a series of reports that Yvonne was pointing out we'll get reaction to in about 12 minutes from now. But, take your pick. Well, pick your industry and take your pick. And I think you do have a very good cross-section of reporting today. So in about 40 minutes from now, give or take, we'll also be having a deeper preview into the banking earnings coming through, with Construction Bank coming through, Meituan's coming through. A couple of minutes as well, BYD is going to be very much in focus, and we have this whole deep dive as well into the state of play across the EV space. But yes, it's going to be busy before we hit happy hour today. I need a beer.
Now that you mentioned beer and burgers, yes,
Bit
why
of Bitcoin,
not? Let's talk a little more about chip maker CXMT, expected to report explosive growth in its first report as a listed company. Among other sort of things we're watching out for, let's bring in Min Lo, our China correspondent, to run us through the numbers that we're expecting today.
Yeah, actually, because it's such a new company, we don't have analyst estimates of the quarterly earnings so far. We have the full year estimates, but at the prospectus, when they were listing, they did flag that they were expecting about a 670% gain on revenue. So huge explosive growth. They're expecting net income to come in at 50 to 57 billion yuan. So here you can see $57 billion, I should say. And this is the full year estimates from analysts. We are talking about, 5 times growth year on year. The net income going from hundreds of millions to 150 billion. So a huge explosive growth on the back of the demand for DRAM chips, right? And coming at a time where there's this structural shortage of DRAM chips and huge price hikes, as well as some of these big names like Micron, SK Hynix, Samsung shifted away from DRAM chip production to HBM chips.
Other metrics?
Yeah, we will.
Beyond the obvious.
I think we will definitely be hearing from the company to get some guidance on particularly its technology, because now it's doing mass scale production of the 4th generation nodes, but industry leaders are making 5th or 6th generation nodes, and it's said to be developing some of the most advanced mobile chips by the end of this year. So to what extent are they able to go into full-scale manufacturing on that front? And of course, it's been supplying a small amount of HBM as well to Huawei, but it's just a very, very tiny sliver of its revenue as of now. To what extent is it able to ramp that up as well? And given the limitations, right, when it comes to its access to the advanced EUV machines, how is it able to continue to advance its technology? What is its capex going to be? It is said to be looking to expand, have a second fab in Beijing as well, and looking to raise funds, especially from state-owned and state-linked investment funds for that, according to Reuters. So all of these will be indications of its future growth trajectory.
Yeah, I mean, the stock has what? Gone up, there you go, 580% since it's listed here.
Off highs a little
Off 10% of its peak still. So they really need to deliver in some ways. Let's talk about the competition, right? This new one, that's the upcoming listing as well. YMT, I got to remember that acronym. I always get it wrong. Yangtze Memory Tech.
Yangtze Memory Technology.
YM is also by initials. It's easier to remember that one. But yes, there's this report from the FT about they want to be the top flash memory producer. What more do we know?
Yes, so they're currently ranked globally number 3 after Samsung and Hynix. So they want to be number 1 by 2027. And we're talking about NAND flash memory chips. These are the sort of chips that doesn't require power. So the concern here is when you have these twin sort of big memory chip players, right? CXMT and Yangtze Memory Technology, whether their global ambitions will put a dampener on global prices, and that could put an end to the bull run we've been seeing in memory chip plays, right? So the concern is there. But so far, if you look at CXMT, they are not really priced at a discount. In fact, they are either on parity or sometimes even at a premium because of the structural cost disadvantages, right? They don't have access to the most advanced chips, so their processes are not as efficient. When it comes to NAND memory technology, that's older sort of technology, and yes, Yangtze memory is at a discount to some of the global industry players, a slight discount. It's not in this, to the same extent as what we're seeing in the EV sector, but certainly this is a concern, and this company has just filed for an IPO onshore. It's expected to be the second biggest in China this year after CXMT.
Okay, lots to watch out for. Min Min, thank you so much for the preview. There in the next hour, speaking of earnings here, we'll be also talking through the earnings of CanSino Biologics. The company reported quite a jump in revenue here, 44%. That's year-on-year. Our exclusive with Dr. Xuefeng Yu is coming up at those times on your screens. We're counting down to the open of trade, 7 minutes away. Futures and the Hang Seng Index in the early goings. Doing this, lots more ahead. This is The China Show. Issued by Chinese. Okay, interesting divergence between where you are on expected vol. And typically when this goes down, price goes up. But as you can see, price has been stuck. But expected vol is now at the lowest level of the year in the Hang Seng Index. So the dynamics quite clear. And I think it also goes to show that perhaps there's a less reason now to look at the Hang Seng Index perhaps and more in the other parts of the market. But good earnings have helped, certainly, when you look at NVIDIA and what it's done with the VIX. But this is a different dynamic.
And I think just after this whole AI memory super cycle, drawdown we saw in July and August, I think you're starting to see a bit more stability, that maybe this trade is finding a bit more of its footing here right now. But it's interesting enough that when you hear like some Morgan Stanley, and they're saying, look, we're tilting a little bit more to the Asia market now because of the stabilization that we're seeing in global markets here. And maybe the Hong Kong side of things could take a bit of a breather, right, that we've seen of late. But yes, they had 3 reasons why. We'll flesh that through here later on. But take a look when it comes to the Hang Seng pre-market. We are slightly to the downside here today. HS Tech seems to be leading the charge here right now. H shares also are lower by 0.8%. Some stocks to watch. Wanke, that was the one. Bilibili higher. China Life, that all reported. So Wanke posting that $2 billion loss there as well. The shares are not doing a whole lot. We're slightly to the upside, though. Bilibili, though, is the one that stands out. They were up close to 2%, and higher smartphone is lower. Also walking out CanSino as well. The stock already surged a few days ago on this whole mRNA cancer vaccine news. We'll talk more about the earnings coming up. The open is next.
Good morning. Welcome back. You're watching The China Show. So yesterday was the first day in a few days, actually, that we had turnover onshore topping 2 trillion. It's been quiet. It's still relatively quiet, but at least we've seen a bit of a spike there. Also just onshore, a very steep rally in the IT space. So the CSI 300 IT index, that's mostly the hardware place, did see a very good session into the afternoon yesterday. Tech as well, so we'll see whether that continues. Early going suggests maybe not.
Yeah, right now we are just kind of waiting for Jackson Hole, of course, and Kevin Warsh's speech and what he can actually say about the Fed's reaction function. Can he actually tame the bond vigilantes here? Or are we just going to get some word salad, as some say, or like more evasiveness, according to Bloomberg Economics?
Or silence.
Or silence, right? So certainly there's going to be a lot of talk about that, what happens in Wyoming. But in the meantime, we're focusing on what's happening in Greater China here. There's lots of earnings to tell you about here. We'll flesh out as many as we can. But we are seeing, we're starting off this Friday morning on the back foot there when it comes to CSI 300. It seems like some of the tech gauges are leading the charge lower here today. So Chinex and Star 50 are marginally lower here. The Infotech index is also down by 0.4%. You take a look at how Hong Kong is doing. It's interesting with what Laura Wang and her team at Morgan Stanley says, why they still prefer A over H right now. So they talked about the recovery momentum from this AI super cycle. There's a gradual digestion of near-term liquidity squeeze caused by, of course, some of these large listings like CXMT, like Unitree of late. And they said national team as well, that have been quietly deploying significant firepower to cushion the sell-offs and help stabilize prices. So they still remain bullish when it comes to Hong Kong, but then it might be taking a bit of a breather there as well. So that's why we're seeing maybe perhaps a little bit more of a low conviction here. HS Tech seems to be also lower by about 0.6% here today. The rest of Asia, though, is actually doing fairly okay. Although what we saw with NVIDIA, right, when we saw it gained, what, $440-some billion in market cap in just one day, the second largest single stock move in one day ever. That wasn't able to translate for a second day, at least, when it comes to this whole AI trade in Asia. Take a look when it comes to earnings, though. We have Wonka, Bilibili higher, China Life Insurance that did report. It is a bit of a mixed sort of picture here, but Wonka posting that $2 billion loss that is setting the shares in the A-share market lower. Bilibili seems to be the standout here. The next in the China tech space were up 2.5% or more. They did meet revenue estimates there. Higher smartphone, and China Life is doing this here right now. So certainly there's a lot more ahead too, right? When you take a look at Hashkey, Akeso, Chalco, Fosun International, those are certainly the ones in focus here today.
Net loss for Akeso, yeah.
Yeah, there you go. That net loss seems to be weighing there. We're down about 7% for Akeso there this morning. Earnings due, of course, we've got to talk about the big banks, right? So CXMT we talked about here, we're expecting some explosive growth in their first earnings tests after being a listed company. And then the big four, once the banks are next, right? And the financials have been doing quite well in the face of all this right now. Maybe it's a dividend play, maybe it's not, but really a lot of talk about that too as well coming up with UBS.
Yes, I mean, globally, financials have really been the quiet standout and have been delivering alpha on top of the income, of course, that you get from that as well. As we were pointing out, their BYD is softer going into the earnings today, and of course, it's BYD of SAIC among the car makers reporting. We talked about the banks and have a look at some of the big names coming through across multiple sectors. CICC, by the way, also coming out, I believe, today, and of course, within the platform space, Meituan is also on deck today. I think we are calculating at least 3.5 trillion in market cap reporting today.
All right. It's going to be busy, to say the least. Let's talk about BYD, though, also reporting earnings later today. And the EV maker could see quarterly revenue return to growth after 3 consecutive declines. And really, this pivot towards exports as the big profit driver is going to be the big key thing to watch among a lot of these EV makers as well. Let's bring in our Asia equities reporter, Charlotte Yang, joining us with a preview here on one of the key things to watch for BYD today.
Yeah, so the most important thing investors care about is the export business and how good they are at translating those export volume and growth into profit growth. So overseas markets become increasingly important for BYD, not just because it's now over 40% of the cars they sold to markets outside of China, but also that they're fetching a higher price there from the products. They're selling it higher than they sell at home. So this is giving traders hope that this may provide some cushion to the profit pressure BYD is feeling from the raw material costs as well as the domestic competition. So the key metric that we'll be watching from the results is how much money BYD is making per vehicle. And the expectation so far is that this will recover to around $1,000 level from $850 the previous quarter. And net income overall is seeing growing 25% from a low base last year. And I mean, overall sales is returning to positive. This is helped by the domestic market, which BYD is seeing recovering some of those market share it lost earlier to competition like Geely and Leap model, thanks to a stronger product cycle. But overall, the domestic market story doesn't really excite traders anymore. So to extend the rally BYD has had this quarter that's more than 20 billions now, they really need the export business to beat.
Is there anything from what's been reported by its peers that indicates the export numbers will be good, or the external shipments will be good? What were the key takeaways from the earnings season so far?
Yeah, so we already know how much a car they have sold overseas based on their monthly sales figures.
Okay.
So yeah, the key thing to watch is how they are translating that into the profit growth. Because on the profit front, you do have the tailwinds from exports and also potentially better product mix. But on the other hand, you do have some persistent headwinds, which is the raw material cost and also domestic competition. And seeing from peers, it's really divergent earnings performance this quarter. Well, the June quarter, which the ones with meaningful export exposure like Geely has been reporting better than expected results for the first half. But the ones predominantly focused on China, the likes of XPeng, Li Auto, the results has been really lackluster. And the guidance they're giving for the September quarter isn't also that good, even though traditionally this is supposed to be a hot season for China auto sales. So that's why the export is really important for traders.
Okay, we're looking beyond the borders and outside. Charlotte, thank you so much. Our Asia Equities reporter there with the preview of BYD earnings coming through. Right, we'll just leave you with a glance at some cash markets as we go into this break. Just looking across the sector movers within the CSI 300. So as you can see, there's really not much happening. It's very hard to underscore, almost impossible to underscore the point that it's a very quiet day across these markets. The telcos index is, though, the early gainer there, 1.5% to the upside. Plenty more ahead. This is Bloomberg. Okay, welcome back. You're watching the China Show. There's been some breaking news right now. Why don't we start things off with this red headline that's crossing the U.S. Postal Service. The mail ballot curbs. Okay, one concept there has been blocked by a judge for now. Not a ton of details on this just yet, but that's so far the information that we have. We will bring you more as we get more context on this. But for now, that's off the table.
Yeah, it seems like this judge is weighing the long-term block ahead of the U.S. midterms as well. So the timing of that is quite interesting, too, as we count down. So temporarily blocked by a judge here today. Let's switch gears and talk a little bit more about what's been going on, right? Bitcoin. I mean, what a quarter, what a rebound that we're seeing. We're back to 80,000. You got to think maybe this whole debasement trade that's come back in a big way that's maybe fueling this. But yeah, what else is going on? We got a big conference in Hong Kong that's wrapping up today as well.
Yes, the very creatively named Bitcoin Asia conference starts today in Hong Kong. Well, simple is better. Gets the message through. One of the companies attending holds one of the largest Bitcoin treasuries among publicly traded firms. You can see, of course, the company stock trading on your screens right now, tracking, as we were just pointing out, there, of course, the price in Bitcoin. Maybe we can thank Scott Bessent and the angst in the long end of the bond market, the basement trade, and everything in between here. For now, we're 80 grand right now on Bitcoin itself. Joining us now exclusively here on set is the CEO, Raphael Zagury. Thank you for coming in, and very nice to see you.
Thank you. My pleasure to be here.
A few weeks into the job.
Yes.
How's that been? Do you have enough information right now to answer that question?
Yeah, so far so good. I've been at the board of the company for a while, so I know the company really well. I've been a Bitcoiner for longer than a decade, so this is it's all in what I've been doing. So nothing of that is new.
It's an interesting time for the company.
Yep.
In the news, of course, there have been some deals that perhaps don't seem to be happening. I understand, of course, there could be other plays as well. Give us an understanding of where things stand.
Yeah, I think the important thing to know is that the way that we're looking to build a treasury company is slightly different than what we've seen before. We're looking to build a Bitcoin operating business. So what we're going to be looking are profitable cash flow companies to bring into our balance sheet. Similar to how Berkshire Hathaway thought about building their business, we're going to be looking to do the same thing for Bitcoin, right? And one of the deals we're looking at is a company I founded, which is Electron Energy. It's a mining company, a Bitcoin mining company that grew to be one of the largest mining companies in the world. And we're thinking about that deal has been announced. It's in the process. It hasn't been confirmed yet, but that's a good example of companies that we're going to be looking for to add to the 21 balance sheet. Other than Electron, we're going to be looking at other companies to bring as well. M&A is going to be a core focus of what we do. That's one of the advantages of being in a Bitcoin bear market is that there are more opportunities for us to look at. Exactly. Good teams, cheap assets, right? It's the right time to build.
It's interesting, the Berkshire Hathaway model, right, where Bitcoin is sort of the balance sheet, right, at the center, and then you're kind of operating on the businesses built around it. Tell us a bit more about just what 21 Capital is going to look like, right? Is it more about a digital asset treasury, or are you going to be more about financial services? Like, how do you chart the next path forward?
Yeah, it's a good question. It's, as I mentioned, I think the first thing is the operating companies. Okay. So that's the first pillar. The second pillar, which is an important pillar, is capital markets, which, similar to what other treasuries companies have been doing, we're going to be looking to raise equity debt, everything that they do traditionally, But the important thing is that when you have operating companies, it opens the doors to do much more in terms of financing. We can look into securitizing revenues. We can look into issuing different kinds of debt, right? Instead of just being something that is backed by Bitcoin, it can be backed by collateral of revenues of the companies, right? So that makes it much different. And then on top of that, I think the other thing that is going to happen with Bitcoin is that you're going to have an expanding credit market around Bitcoin. Lending against Bitcoin is already growing, and I think it's in the future is going to continue to be a good business to build. And the way to think about it is that we're building a different kind of financial services industry on top of Bitcoin, right? Bitcoin is a commodity, a collateral, but also a very good basis for building a financial system around it.
And I mean, the currency you're using, or you'll be looking to use for these M&A transactions, would it mainly be Bitcoin? Are you using something else? And maybe just to also ask, how many Bitcoin are you sitting on?
So we have 43,513 Bitcoins in our balance sheet. So roughly a little bit more than $3 billion at today's value.
Okay, and the currency at which you will be conducting most of the M&A?
It will depend on the transaction. What we can say is that our stock is trading at a discount to NAV right now, right? So probably it wouldn't make sense to issue stock at NAV to do M&A transactions. But the good thing about doing some of these business with profitable companies is that some of these deals may be self-funding, right? And that's how we may be looking at doing with that, with other equities, or maybe even using our Bitcoin as collateral. Right now we have around 2/3 of our balance sheet that it's unencumbered, that we could use as collateral to get some leverage. So there are different things that we could do potentially to do the acquisitions, right?
And tell us more about the businesses. What's the sort of the first operating business that you're looking at that could kind of generate some positive cash flow for you guys?
The very interesting about the time that we're in Bitcoin right now is that what we're building now, I've been thinking about something like this for a long time, and you can only do it now because Bitcoin is at a place of institutionalization that we haven't seen before, right? So the business that we're looking for is that not only businesses that are profitable, cash flow positive, but that can scale with more capital, right? Up until a few years ago, it was very hard to find businesses that could scale because the total addressable market was smaller, right? Bitcoin was still growing in terms of adoption. I think with last year, a few years ago, with the ETFs coming in, more institutions coming in. As I said, I worked my whole career in Wall Street. I worked at Goldman, Deutsche, big companies, right? And you couldn't even, up until a few years ago, I couldn't even have a conversation about Bitcoin with some of my colleagues because they're blocked. They wouldn't even hear about what you were saying. And that switched completely from where we were before. Now I have actually the opposite. A lot of them reaching out to me and say, well, we're thinking about adding Bitcoin to clients' portfolios, to our own balance sheet. We're doing transactions with Bitcoin. We're looking at trades using Bitcoin as collateral. That was unthinkable maybe a couple of years ago. And that gets us, I think, to where we are in 21. I think this is the perfect time to be building. When you look at the combination of the bear market, which may be coming to an end, who knows, right, with Bitcoin at 80,000, and then the opportunities ahead and where Bitcoin is, I think this is the perfect time to be doing what we're doing.
And what's the framework you're using to look at which types of companies to buy? And as investors of 21, am I buying a holding company the same way I'm buying Berkshire, for example? And are you going to be accruing dividends? How is that whole
good
process
question. So Bitcoin is our benchmark at the end of the day, right? So every investment that we look at is going to be measured against Bitcoin. If we can't beat Bitcoin, then it's much easier for our shareholders to just go out and buy Bitcoin as an asset, right? They can buy it through an ETF, through direct custody, right? So what we're looking to is have better risk-adjusted returns, and it's just not beating Bitcoin. It's having better risk-adjusted returns compared to Bitcoin, right? That should be the benchmark that will guide every single one of our decisions going forward.
What is that hurdle now? I'm curious.
Well, it depends, right? That's the hard thing about Bitcoin is that it's still in discovery process, right? It's a drop of the bucket in an ocean of liquidity, right? Look at Bitcoin, $1.5 trillion in terms of total market cap, compared to gold at 30 billion, real estate at 300 plus, right? So if you look at where Bitcoin is in terms of potential for savings technology, because ultimately I think Bitcoin is the best savings technology of the world, and is going to capture some of the monetary premium of these assets, right? I think if you look long term, Bitcoin has a lot of upside potential. Short term, if you try to measure what the benchmark is, it could be anything. Price in the short term can move anyway because, again, it's still an asset in discovery, right?
I mean, we're seeing a bit of recovery. I mean, 80,000. What do you think is driving that right now?
I think, first of all, the price was very depressed for a long time. We've seen this if you've been in Bitcoin for a while, right? It's, again, because it's still a nascent asset. The kind of interest that you see goes up and down with time.
Yeah.
And we were just at a period that, a lot of the interest that was driven by the ETFs, everything that we mentioned last year, dried down a little bit. And now it's coming back. So I think it was like a spring that was coiled and it's kind of like coming out. But as I said before, it's still a drop in the bucket on the ocean of liquidity, right? And on top of that, I think the recent macro events help Bitcoin. Bitcoin is a monetary asset that, different than anything else that we've ever seen as humans, it's extremely predictable. The monetary issuance is written in code. You don't have, 12 different Federal Reserve banks making determinations that are opaque, that you don't know what's going to happen.
Sure.
Treasury chairs coming in and trying to buy the long end of the curve. Nothing of that happens, right? It's extremely predictable. You know that every 10 minutes a new block, on average, every 10 minutes a new block is going to come in. 3 1/8 Bitcoin is going to be issued, right? You know that every 4 years that halves, it's all written in code, it's all transparent, it's all open source, and we've never seen this. And going back to Berkshire, Charlie Munger actually used to say that predictability should trade at a premium, right? And I think Bitcoin should trade at a premium exactly because the monetary policy, it's a line. You know exactly what it's going to be, for the foreseeable future. And unfortunately, we live in a world with a lot of uncertainty right now, not only politically, but on the monetary side as well. And I think that's what we're seeing on Bitcoin right now. It's a lot of the realization that this is a very different asset from what we've seen before.
And you mentioned earlier at the start, you've been a Bitcoiner for a long time. Do we have a better understanding now what kind of asset it is based on how it behaves and the correlation? How has that changed over the years up until this point where it's been stable largely this year?
Yeah, so David, I'll tell you, I think that grokking Bitcoin is very hard because Bitcoin is multidisciplinary, right? I was very lucky or unlucky, depending how you want to see that. I grew up in Brazil, and I went my teenage years in the 90s in Brazil, late 80s, early 90s, when inflation was wild. We would have money literally losing its value overnight, right? I remember my mother giving me money to school for lunch and say, here's the money, don't bring it back, because if you spend everything, because if you bring it back, it's going to be worthless by a few days. Yeah. So it kind of ingrained on my mind that money can lose value a long time, right? And on top of that, so that's the social aspect. You have the technological aspect, which is, Bitcoin is digital, it's globally native, it can be moved anywhere, right? As I was saying, it's all written in code, it's easy to understand. And I think it takes time for people to really understand all of the different aspects of Bitcoin. But what I can tell, as I said, gradually we're starting to see more and more of the institutional side of the world coming and understanding Bitcoin and adopting Bitcoin as a reserve asset.
Raphael, thank you so much.
Yeah.
Very
My pleasure.
Let's do this again.
Thank you so much.
Next time you're in town. Raphael Zagury there, CEO at 21 Capital. We'll leave you again with a look at markets right now. Not quite there across these equity markets. I think last we checked we were flat and largely still are across the Hang Seng Tech Index at least. Kospi's down. Nikkei is, let's call it mixed across the Asia-Pacific equity complex. Lots more ahead. This is The China Show.
We're still tracking, of course, earnings here today. China Wanka saw its losses deepen to $2.2 billion in the first half of this year. The total was close to the upper range of the firm's forecast and brings its combined losses since 2024 to more than $22 billion. Wanka is expected to formulate repayment plans for its public bonds maturing next year. China Life Insurance says profit more than tripled in the first half, with net income rising to $20 billion. That's in line with preliminary results that were released last month. New business value growth remains solid as the company continued internal reforms. China Life also boosted stock holdings in the first half with a focus on high dividend assets. HashKey's 2026 interim revenue jumped nearly 21% from a year ago to $43.7 million. Its adjusted net loss narrowed 21% to $40 million. It comes after the digital asset market went through what HashKey called a phase of cyclical consolidation.
Okay. Markets, Taiwan Tech, TSMC, MediaTek, and some of the big NVIDIA plays, of course, are still, as you can see, the solid bright spot across the markets that are largely quiet at this point in time. We're starting to think of earnings season, and one stock to note was already down the most since last year. We're talking about Michua here. And we are getting a downgrade this morning from Jefferies, and the price target at 252. You do the math, we're down 4% in the cash markets. That's about $10, 218 right now. You do the math between, let's call it 220 and 252. That takes you to 32. Yeah, give or take some 10 plus upside still being priced, but as you can see, the goalposts are being moved as far as Jefferies is concerned. Right, Chinese markets are looking, there's nothing much to talk about with the exception, I guess, of the telcos index, which is the bright spot across the CSI 300. Hang Seng Tech is flat as a pancake, or a jianbing, if you want to use it the Chinese analogy there. Iron ore is still seeing some upside there. Shanghai crude perhaps playing a bit of catch up to what we're seeing across the oil price is concerned. Right, on the earnings front, lots to talk about, at least $3.5 trillion, and we have much more coming up, of course, in earnings.
Yeah, we're going to get to the take from the biotech sector here. We're speaking exclusively with the head of CanSino Biologics on their latest results and recent breakthroughs in mRNA vaccines. Xuefeng Yu joining us in just a few moments. This is Bloomberg. Welcome back to the China Show. A look at the CSI 300 a half hour into the session. And yeah, we're around those session highs for the Chinex, at least right now. We're now seeing gains of more than 1%. So a little bit more momentum building around Shenzhen here this morning. Of course, the rest of the markets are pretty quiet, just given that we are, of course, counting down to, of course, Kevin Warsh's speech at Jackson Hole. So for the meantime, we're still digesting some earnings coming through from Greater China here this morning as well. We talk about at least $3.5 trillion in terms of market cap that could be reporting here in the next few hours or so. So certainly there's a lot to unpack here right now. But yes, what else are you watching out for, Dave?
Well, it's been quiet. So like the drop, I think, in vol is interesting because there is, of course, event risk. And I think it's counterintuitive when you look at the event risk and the amount of, the lack of hedging we're seeing going into a risk event. And I think the NVIDIA story is doing more than enough. I mean, look at this, right? Look at this. You look at the hardware place. You look at what's happening in parts of Taiwan. It's doing enough to at least keep the legs on that and drive vol down going into an event risk on a macro front, right? And of course, things could look very different depending on what Kevin Warsh says this time on Monday. But I think we have the weekend still in between, and that's to worry about. In the currency markets, which is quiet with the exception of a few pairs, the Philippine peso is one to watch, and that's standing out. So the won has really been stronger. The standout to the upside, we've had a central bank decision there on both. The Banco Central was yesterday. Record low now on the Philippine peso. We're steady on both CNH and the dollar yen. We are still on the stronger side of the last, let's call it, 3.5-year range on the Chinese currency. Just something to note there. As far as commodities go, so gold had been holding on to gains. That's past tense. I think we're now just slightly off from the cutoff as well, but it's been, again, very good, and we're consolidating at around 4,600 as far as that's concerned. The pickup we've seen recently is in the metals market, right? So whether that's copper a few days ago, iron ore recently, and then that's translating to what you just saw there with rebar futures. The 10-year yield, Chinese 10, we'll get into a bond market rabbit hole later on, of course, with everything from dim sum, kung fu,
panda,
and panda bonds and the issuance that we're seeing there. That's not a trip to the zoo or a trip to the buffet. That is, of course, a deep dive into the CNH market. There we go. Let's get it back to the earnings story. Yeah.
Let's check CanSino stock here right now. Of course, the Chinese vaccine maker significantly narrowed its first half losses on year by 95% to 720,000 renminbi, and its revenue jumped 44% for the same period.
Yeah, the shares got a big boost a couple of days back. So you obviously have to split the difference between where we are now and a few days back on its mRNA cancer vaccine collab with Chinese AI biotech firm DeepGen AI Biotech. Joining us exclusively to talk us through all those key themes the vaccines, mRNA, the business growth, and the fundamentals of the company is Dr. Xuefeng Yu, Chairman and CEO of CanSino Biologics, joining us exclusively. Xuefeng, as always, very nice to see you. I think last we spoke was, I think, about 6 months ago, back in March. Give us an update of the business. We know and we've seen top line grow 40%. What do we need to be focused on at this point?
Yeah, thanks, Yvonne and David. It's great to see you again. And I think this year is really truly transition year for us. As you know, last year we were barely break even, and this year we see, the first half year we have this 550 million RMB, revenue, and certainly we see 44% business, the revenue increase. I think if we look at the not just the dollar number, if we look at our pipeline, we're no longer a single vaccine company. We actually have 3 portfolio products onto the market. We have our meningococcal conjugate vaccine. We have a pneumococcal conjugate vaccine. We also have a diphtheria tetanus component pertussis-based pediatric combo vaccine, all launched. And also we are not just focus on the pediatric market. We actually have the, for example, meningococcal conjugate vaccine with the expansion to the adolescents, and we're looking forward to extend it to the adults. Certainly, we also have our DTP vaccine aiming for the whole, age groups. We have the priority review for the 4 to 6 years old in the Chinese regulatory agency, and we certainly looking forward to have this product contribute to broader market needs. I think this is really contribute to the overall business performance. And another significant movement is our international market. As you see, this year we have our only half year, we have 150 million yuan revenue from international market, which is over 4,000% increase compared to last year. This is a significant movement. That means our two venue of market is really working. And we are expecting our pneumo conjugate vaccine all will have more countries to be licensed, and will contribute broader, market demand, and to have better market shares in the international stage. Yeah.
Yeah, it's interesting, that big jump, because overseas sales was made up less than 5% of your overall sales in 2025. How you look at the rest of 2026 and beyond now? How much significantly higher could your overseas sales be now?
Well, I mean, this year, if we look at the up to now, we have roughly 25% the revenue from the international market. But I would still expecting with the Chinese market in the next half year to grow stronger, and probably we'll still see the significant contribution from Chinese market. The international market will pick up with more countries registered for our product. For example, we have recently received the market clearance from Argentina for our meningococcal conjugate vaccine. If that is eventually turn to the sales, it will have a big impact on our revenue. And we're also conducting multiple clinical trials in different countries. And we're expecting in the next few years, the international market will take even more and more weight in overall company revenue.
Are there, you mentioned, of course, Argentina there, and one specific product that you are seeing a lot of progress on. What do you think the product mix is going to look like there as far as the overseas markets go? I just want to understand where you see demand growing the most.
Well, if we look at this, the currently licensed product in the international market, primarily our meningococcal conjugate vaccine and the pneumococcal conjugate vaccine, those are two highly demand products, and there are only few suppliers currently onto the market. I think certainly we have our advantages of our product with the comparable quality with the multinationals. I think those are potentially be the contributor that fill in the market gaps.
And certainly you have ambitions to really expand your business overseas, Dr. Yu. You have mentioned before, though, that there is a bit of a challenge finding experienced specialists when it comes to conducting clinical trials, for example, or submitting applications and whatnot. How are you navigating that in terms of recruiting? And when it comes to manufacturing, would you consider a site overseas? What are some of the plans now?
That's a very good question. With our approach, we're taking multiple approaches suitable for each individual countries. Some of the country we are doing the directly product export, but some we do the tech transfer. We rely on local partners to make the product and support clinical trials. And certainly, they are more familiar with the local market. We build up this partnership that will give us a long-term sustainable growth in the country or in the region.
Okay, can I ask about the mRNA, your mRNA flu vaccine initiative? And my understanding is the Moderna one got the thumbs up from the FDA. Just give us an update on your front, where you are on yours.
Okay, definitely. mRNA technology is something we look into it a long time ago. Now it's almost like 10 years. We understand that the mRNA technology has its advantages, and at the time, we also recognize there are limitations that potentially will actually preventing a broad application for mRNA technology. So initially, we focus on this pandemic application, and that's, you can see, we have our co-development or technology transferred to Malaysia to develop flu vaccines. However, we think the mRNA technology was more, address the potential other medical needs, such as therapeutic areas. We develop our technology platform that we have our unique IP and unique features of those IPs. For example, our 3-component LNP formulation. And we see our formulation has can induce a stronger T-cell immune response, and also can be localized instead of go through the liver for immune response and degradation, metabolics. And we do see this LNP formulation has its advantages. And luckily, the Moderna's clinical trial demonstrate the success for therapeutic indication. I think that certainly give us more confidence for our potential application. As you know, we have built up our also therapeutic pipelines like glioma and what is called the rhabdomyosarcoma, hard to say the medical words, but those are the therapeutic indication for cancer. And we also have this HPV therapeutic vaccine in the early stage development. I have to say those are still in the preclinical stage, but we do see that has a potential to really advance to the clinical trials.
Yeah, I mean, the stock moved substantially on the back of some of the news about these positive late-stage results for this mRNA personalized cancer vaccine, Dr. Yu. Do you have any plans then to pursue cancer applications then of this mRNA technology?
Yes, we do. For example, our glioma, we have gone through this ethical committee review. We're waiting for the final clearance to go into the investigator-initiated clinical trials.
Okay, so what milestone should we expect there? Because this is obviously something the world is looking forward to and hoping for success from companies like yourself. Help us understand. And I think also maybe similar theme here, but different question. You know, much has been said about the pace at which Chinese biotech has been able to push through progress in clinical trials. Does that also apply to mRNA? Is my other question there.
It definitely is. I think, as you described, the Chinese, medical research field can, with the regulatory support, we can fairly quickly, push through into the clinical trials, and at least in the early stage, to evaluate whether, this is a viable approach. We are expecting to go through that fairly quickly, but still, I mean, it's because we're dealing with rare, tumor typing, and we still have to follow the regulatory, compliance, and we want to make sure the products, the safety, and also, all the aspect for the, patient screening has to be really conformed. It takes time.
Sure.
Yeah.
Yeah, and just back to the first part of my question, are there specific cancers you're targeting?
Yes, like a glioma, which is a type of tumor in brain tumor, and there's another what's called the RMS, which is also pediatric cancer that is rare cases.
Okay.
Yeah.
All right, Xuefeng, we're going to leave it there. Xuefeng Yu there, Chairman and CEO of CanSino Biologics, joining us out of Toronto here this evening. More earnings conversations coming up. We got the big banks in China that we're going to be reporting later. And we have UBS's investment bank's head of Asia Financials Research, Mei Yan, joining us just to discuss what to expect. This is Bloomberg.
Okay, just a look at another big day for earnings across the Chinese markets, everything from Meituan to BYD, SAIC, of course. That's your consumer-looking parts. You have, of course, some of the big hardware plays. CXMT, of course, could be reporting, so we'll look out for that. Some of the brokers like Huatai, CICC is also reporting, and that takes us into the thick of financials where you have effectively the big banks, ICBC, Bank of China, and the lot there, of course, set to report. And that's actually also been a very, that's a group, that's a part of the equity market that's delivered decent gains.
When you talk about biotech, we talk about financials as well as some of the standouts beyond just the whole AI trade, right? Let's bring in Mei Yan now, head of Asia Financials Research at UBS Investment Bank. Obviously the financials have done well. I think there's a dividend play there, but what will the earnings tell us?
They actually this year has an inflection point of revenue turning to positive growth. From the last 5 years since COVID, the bank's revenue has been declining because of the interest rate cut, net interest margin compression. But this year is the first full year revenue is going to grow, pretty much beating everybody's expectation by 8 to 11%. So that's very different.
Okay. Why is that? What's driving this reversal?
It's basically net interest margin stabilizing.
Because rates are still low.
Rates are low, but they've been, in the last few years, NIM have dropped 80 to 90 basis points for these big banks. That's huge. So now the NIM is only 1.2 to 1.3%, but they're stabilizing. On top of that, the bank's loan growth or asset growth are still 5%, 6%. So that's make them having some volume growth, and the net interest income volume value is growing at 5 to 7, 8%. That's a big support to their revenue.
How do you look at it based on just the macro picture here right now? Just a credit demand and the like. How are you assessing that?
It's slowing down, obviously. So loan growth has slowed down from 12% in 2020. Now, recently, it's only 5.1%. And if we look at what's driving the loan growth, it's pretty much 100% corporate loan growth. So the government projects, the LGFVs or the SOE companies are still borrowing, but the private sector and also consumer side balances, credit cards, mortgages are declining. Yeah.
Asset quality, how has that changed? So, I mean, the property market's obviously just part of that.
Yeah.
We're not yet out of the woods. It seems like we're stabilizing. So how is that showing up on the balance sheets?
Yeah. Reportedly, the NPL ratio has been flat. But, if we look at the details, it does look like the formation for the last few years has been going up. But the banks are accelerating provisioning and also accelerating the write-offs. So the net NPL ratio stays steady. But the trend is very different on the large corporate side. Okay. Corporate loans NPLs have been flat or slightly declining, while the retail side has been going up. We've seen credit card NPLs going up, consumer loans NPL going up, still yet at around maybe 1 to 2 to 3%. It's not too high, but still going up.
Why do you think people have been buying, investors have been looking into the financial space so much? I mean, we talked about dividends.
Yeah.
How sustainable are those dividends now?
Yeah. We wrote a report like 2 years ago on this because there was a lot of debate whether that can be sustainable. And our analysis shows that they would be sustainable. And also the Chinese banks will avoid reporting a net profit decline. And that shows in the last few years, even though their revenue declined. So going forward, now their revenue is turning more positive growth. So they would have no doubt, I think they will report a net profit increase, maybe between 3 to 4%. So that helps on their dividend per share. So DPS is going to go up. So I think in the next couple of years, dividend will be sustainable.
Okay. What about fee-based income? I know that's not a very big part of the banks, but what's that story telling you?
Yeah, it's not too small. It's usually in the teens or maybe up to 20% of banks' revenue. Since September 24, where the government came up with all these measures,
the
etc.
big bazooka.
Yeah, exactly. So the capital market has been very active, especially stock market. So that helps with the distribution of mutual fund, the agency fees, and insurance product distribution as well. So that helps. So we're seeing like more up to mid-single digit fee income growth or low single digit. The drag has been still, again, on the consumption side, where the credit card fees has been declining and declining every year, reflecting the shrinking sort of consumption transaction volume on the people's credit card.
This is maybe a more Hong Kong story, but just given this whole crackdown on offshore wealth, do you see that in any ways impacting the earnings of these Chinese banks in any way? Just given having, we've talked about the amount of money that's come into Hong Kong, whether it's wealth, whether it's brokerages or setting up a bank account here. Do you see that meaningfully in any way impacting the fundamentals?
It should be meaningful to some extent for the Hong Kong financial institutions, but less so for the China's. Okay. So China's banks are so big. So the cross-border flow tightening since May 22 this year, has more sentiment impact, I think, particularly maybe on the insurance, also on the banks is less impacted. The brokers, yes. So it's, I think it's after maybe a few months, it tend to somewhat stabilizes. So we'll see, but the direction by the government to, demanding more transparency or disclosure on the offshore assets by individual and corporates, as well as tax levying of, say, 20% on them, is going to happen. So that's just it. So, yeah.
Okay. May, I actually picked up on something you mentioned twice already. I was hoping you could stay for a few minutes. Maybe we're going to ask you in a moment. That was May Yan there, head of Asia Financials Research at UBS Investment Bank. We have plenty more ahead. All
All right, we're checking Minimax here this morning. The shares are doing this. We're up some 2% here after, of course, that first half revenue beat. You have the likes of Citi and Jefferies raising their price targets here, thanks to really what they've been saying, right? Widespread enterprise adoption of its AI models. So, yes, continuing to track, of course, the reaction there from the Minimax here this morning.
Yeah, the Chinex index is the one that's outperforming, so the AI play is showing up as far as that's concerned. Apart from apart from that, it's really quiet, and actually we're being extremely generous there when you look at the Chinex index. It is coming off highs. We were up much higher earlier on. Apart from that, volumes are quite low. Vol has been also depressed as well. So I think we'll have to wait until Monday so we have a clarity on a few things. A ton of earnings coming out the next few hours. And of course, what Kevin Warsh will say out of Jackson Hole, perhaps we'll have more clarity as we begin the new week. But we have plenty more ahead. This is Bloomberg.
11:29 a.m. in Tokyo. Japanese markets are heading to a lunch break in just a moment, and you are seeing around, when it comes to Nikkei 225, some gains here, about 0.8% for the Nikkei as well as the topics. Yields are picking up, though, on the JGB curve. Certainly, of course, there is some nerves heading into Jackson Hole, what Kevin Warsh is going to say. It seems like expectations are he's not going to say much differently from what we've heard from previous speeches as well, so maybe that could roil the bond market once again, particularly the long end.
Yeah, and things could be coming to a boil when you look at that going into that. But not going to lie, it's boring out there today as we await, of course, something that he might actually say. Okay, maybe to get us more excited is still with us here on set to talk some final thoughts on Chinese banks reporting today. Mei Yan, head of Asia Financials Research at UBS Investment Bank. So we picked up on something you said earlier on that so NPLs on the consumer-facing businesses of the Chinese banks have been picking up.
Yeah.
The credit card business has been shrinking. Mm-hmm. Is that an accurate way of describing it?
Yes.
What's happening? What's there? What's the big trend?
Yeah, well, obviously, you saw the retail sales numbers is maybe barely growing, maybe 1% or so, right? So it's clearly some kind of recession or balance sheet rebalancing by consumers. Of course, there's also another side of it where people are buying more stuff online. So offline credit card usage may be less. And usually the credit card are used more for bigger items. And with these bigger durable items are slowing down a lot. So, but even with the online sort of shopping for purchases, etc., the volume is also barely growing according to the banks. So it just shows more like a recessionary consumer side of the story.
In terms of your stock picks, then, what do you think is going to do?
Yeah, we have been recommending the higher dividend, more than 5% dividend yield, large SOE banks. If we look back, who have been growing faster, these are the large SOE banks. So their stock price has been consistently last couple of years beating MSCI China. This year again, they're up like more than 20%. Total return could be 28% in the last 3 years every year.
Wow. Yeah. That's better than NVIDIA, if you think about it this year.
But NVIDIA is so big already, so
okay.
They're still
maybe
small.
Up until a few days ago. NVIDIA did very well, of course, 2 days ago. Mei Yan, fantastic. Thank you so much. Head of Asia Financials Research at UBS Investment Bank. Okay, let's have a look from one part of the banking sector to let's have a look at DCM now, and certainly this pickup we've seen in the dim sum bond market. So on your screens, dim sum bonds, panda bonds, and of course a smaller part, but growing because June was interesting because you had Tencent issuing dollar bonds, the Kung Fu bond market. There we go. Monthly issuance year to date, and as you can see, it's quite visual. And easy to identify the standout so far in the DCM space. Why don't we get into this?
Let's talk a little more with that with Jill Lee. She is the Deputy Head of Investment Banking when it comes to BOC International. Jill Lee, it's great to have you here. So we talk about, it seems like you guys are busy. It's quite active when it comes to DCM here these days. So tell us a bit more about what's driving that and really how sustainable do you think the sort of momentum that we're seeing is going to be?
Usually, this is this is the vacation season, but
it's supposed to be summer.
It's supposed to be summer.
Yes, it's supposed to be summer vacation season, but actually for August it's quite busy for us. We've in the pipeline there are a lot of deals, and I think there are quite some driving force because just take an example, we just finished a transaction successfully 2 days ago. We helped Cosmic Gas to make their second issuance and entered into the market. And the comparison between last year's performance and this year's is quite impressive, we would say, because for last year's it launched a single deal, 1.25 billion tenor with 5 years tenor.
Okay.
And for this year, a further expanded the tenor from 10 years from 5 years to 10 years. And the issuing volumes increased like almost triples and to 3.5. Right. And the peak book volume reached 25 billion, which is the highest book value in among the foreign corporate issuers. So I think this is quite amazing. And the yield actually for 5 years, because it has comparables last year's, actually have tightened 70 basis points.
Okay.
Which is
Are you seeing a pickup in? I mean, to the point you just made, is the pickup across the board across issuers? Are foreign issuers coming back in a big way? And why do you think that is?
Yes, I think there are several reasons behind this. Because the absolute yield, nominal yield curve for the CNH is relatively low, right, and the low volatility as compared to the U.S. Everyone, everyone is talking about the bond crisis, maybe. And so I think relatively the U.S., the CNH market is relatively stable and better liquidity, because we all know about the more injection of liquidity from the SBBC, Southbound Bond Connect, that happened in July, that Mr. Pan that had announced this July in Hong Kong that yes, exactly. He mentioned that the annual volume peak level of SBBC amount quota will be increased from 500 billion to 800 billion. So which these are all happening, and in Maine also the insurance companies are given green lights to be allowed to enter into this SBBC, which give extra amount or demand from the investor side, and that they are in need for they suit for the longer tenor to cater for the more financing need from those issuers who want to issue longer tenors. So these are the more liquidity, and also driven by this, there are better secondary market performance. So these are all, and for issuer side, we see increasingly a lot of issuers have more CNY exposures nowadays. And also a lot of issuers want to diversify their financing needs.
Well, I was actually going to ask you the opposite side in terms of raising dollar debt, because another trend we've seen is Chinese companies going abroad. They have now more dollar needs, and I think 10 cent hit the bond markets, I think, in June with quite a sizable.
Yes.
Is that a trend to watch? Was that a one-off? So what's your outlook as far as that?
I think from my observation, the most majority issuers that takes dim sum bond market is those Chinese issuers, and a lot of them, because this market has been existing for a long, for like more than 10 years, and these years, because of the relatively higher U.S. yield curve, a lot of repeating issuers, when they have maturing U.S.-denominated bonds, choose to refinance in terms of CNH, because they they think the yield curve is relatively too high and too volatile, making them harder to get a better financing window.
Okay.
And for CNH, because they have more support from SBBC, Southbound Bond Connect, liquidity to help them to better, give some savings.
And we're starting to see more of these AI companies in China catch up, right, to the big hyperscalers in the U.S., right? And whether it's Tencent, we talked about Alibaba tapping the share,
Baidu, and
all that.
All these.
Do you think tech? I mean, this whole AI boom, is that what's going to be driving most of the pipeline for the rest of the year? I mean, how do you see that?
Yes, they are. They are regular repeating issues. And they tend to issue, most of them, they tend to issue both U.S. bonds and dim sum bonds, because they have huge amounts of capital needs.
And not that if there is a deal that is confidential, I don't want you to divulge the details, but should we expect these big tech, the Chinese tech platforms, to tap the bond markets even further these next few months? Like, what are your expectations? What is the expectation in the market?
From historical observation, I believe one or more of them will. That's, I think. And talking about pipelines, as you said, I'm not real comfortable to say those names, but I think more foreign names I'm also expecting to be come into this market by region, maybe from some from U.S., from Europe or Middle East, and also by sectors. Some are from maybe energy sectors, or maybe from high tech or financial related, rather than the traditionally most the issuers covers from the financial institutions, like banks, international banks. They have coverage in. They have exposures in CNH, but those are the names that traditionally are U.S. dollar funded. So I think those are names that might come into. They want to tap into this.
It's a cheaper route for funding, right? Yeah.
Yeah, and is the cheaper part of it? Are there issuers that don't have any or major CNH, like dollar liabilities that they just come here because it's cheap, for example? Like, how much of that is a thing?
Yes, that's a very good question, because some of the issues they choose to come here because it's cheaper. They want to just maybe speculation purpose to catch the market, and so they wait until the curve and after CCS level meets their target.
Right.
They want to beat their U.S. curve, right? Existing U.S. curve, and others they just want to diversify their funding need, or maybe to be more smoothen their funding needs because of the current volatile markets.
I think Bloomberg crunched some of the numbers. The average coupon for Panda bonds is like 1.8%, which is like a record low. I think
yes.
Like 200 bips lower than what the U.S. 30-year
yield.
Panda
bond, a Panda bond is actually onshore market. That's another very interesting topic, because I think a lot of people might be confused by all these terms. Combo. Let me explain a little bit. So Panda bond is foreign issuers issue in the onshore Chinese market. It's the domestic CNY market. It's CNY denominated. And while on the other hand, for dim sum market, it's just offshore CNH market. And for Kung-Fu market, it's those Chinese issuers issuing global usual bonds.
And I guess a final question there, because UBS announced that they did, I think, a 5-year in the Panda bond markets at an extremely tight to the spread to the development bond gates, right?
Yes. So that's the development bank is the benchmark for Panda bonds.
Right. So what's the advice? So what would if I'm trying to tap the CNH bond markets, like, why do I go Panda or do I dim sum? What would be the determining factor? Between the two?
It depends on the different different institutions may have different needs. And for Panda bond, if you have exposure domestically, you want to use the proceeds onshore, and you have long-term exposure in domestic onshore. Maybe you have domestic business, either be your corporate issuer or financial institutions. Panda bond gives the most savings right now. And for dim sum bond, if you have global exposure, you just want to diversify your funding, it might be more flexible. And for panda bonds, you need more documentation domestically.
Okay. Julie, it's great to have you. Thank you so much. Deputy Head of Investment Banking at BOC International.
My pleasure.
Yeah, a look at Asian markets, how they're doing here right now. CGB yields, we're still seeing a bit of a rally here right now at 170, but we're watching very closely what goes on across Asia. Mixed picture. Kospi is lower by 1%. Taiwan, though, still looking pretty happy here right now as we count down to the weekend. This is Bloomberg. Well, more than 1,200 people remain missing after a flash flood tore through the China-Nepal border region. At least 380 people have died in the disaster. And as rescue teams search for survivors, authorities are now warning of new risks in the region. Let's bring in our China government and economics reporter, Lucille Liu. She joins us now. It's such a devastating story. Just tell us what the status is in terms of rescue efforts, and what are some of these secondary risks now from this flash flood?
Yeah, Yvonne, I mean, it's just, it's a tragedy that has affected so many people. You know, we've seen tourists, visitors, pilgrims from, everywhere from Malaysia to India to Australia, the US, the UK, just people all over the world being affected and families searching for loved ones. Obviously, because of given some of that footage, we are expecting the death toll to go up rapidly as the search and rescue efforts continue. There are warnings about the secondary risks because so much of water has come into this area from this glacier. There are risks of secondary flooding. Experts are warning that if there's heavy rainfall, that could be very devastating. There's sort of natural dams and these new rivers that have formed that experts are also warning may flood. So, everyone is sort of holding their breath, and there's a lot of just well wishes and, kind of shock at, all of these footages that have appeared before us and just how rapid, how this happened.
How quickly and sudden. The Chinese Premier, Lucille, Premier Li Qiang, was inspecting the site, I believe, Thursday afternoon to, I guess, inspect and manage some of the relief efforts there. Put that into context. How rare is that China has sent its premier?
Yeah, I mean, this is varied depending on the leadership, but the current leadership definitely has made more or less frequent sort of these visits after natural disasters, or it's taken longer. So, for example, last time I think Premier Li went on site after a natural disaster. It was in 2023 in Gansu after an earthquake there killed over 150 people. But that was a week after. And this is, this is sort of, the fastest response we've really seen. So it certainly shows how high priority this is. And, this is in line with what's happened this summer. There has been a lot of extreme weather events in China, flooding that's killed, that's left to many deaths. And so authorities have been taking a lot of precautions. When the typhoon came through, there were closures, road closures, school closures. And of course, even when, there was barely any rain, you still had schools closed for 2 days. So there's definitely a very cautious approach to, managing extreme weather events. And so, I think we're all kind of holding our breath to see just how the rescue efforts go and how many people can come out of this.
Lucille, thank you for the update. Lucille Liu, our China government and economics reporter in Beijing for us. As we were just wrapping up there with Lucille, so we are, in fact, just getting, as we speak, an update. This is coming through out of the Nepal police, a comment on X that the death toll has now risen to 469. So that is the latest update according to the Nepalese police. We will bring you more, of course, once we have more information. In fact, we will have more information on the situation there in Nepal in the next hour. That's when we'll be speaking with the Nepalese finance minister. He'll be joining us, of course, in the next show. So stay tuned, of course, for that coming through.
We'll also hear from Bernard Chartery there, the chairman of the Chartery Group, on the situation on the ground. Those interviews are happening in just a few moments on Insight with Haslinda Ahmed.
The last Q3, Q4 data for me last year was, I thought we certainly weren't restrictive and maybe even a little accommodative. So we've got work to do.
Kansas City Fed President Jeffrey Schmidt discussing U.S. monetary policy really at Jackson Hole. He's probably one of the few voices that are saying, look, they don't think that rates right now are restrictive enough to slow down this U.S. economy and really cool inflation. And that's really the likes of Beth Hammack, too, that's been talking about that. You pair that with some other Fed officials like Austin Goolsbee from the Chicago Fed that says, look, I still need more evidence to show that this inflation that we're seeing is just a one-off sort of thing based on war, based on tariffs. And so he's like, I'm willing to wait. So there is this division among the Fed. And I think investors are waiting for Kevin Warsh to kind of be the decider of all this. But I don't think we're going to get it today. We'll see in his speech.
The first one.
Yeah.
At Jackson Hole.
At Jackson Hole.
At Jackson Hole, of course. And I think if you judge it by the first briefing, or the first few briefings.
And the June and the July, yeah.
I mean, if you ask Anna Wong
meetings
at Bloomberg Economics, right, that investors will probably be disappointed if that was the version of Kevin Warsh that we get. What I think is also quite clear is best case is we have to wait and see if they are restricted enough. And that is, I guess, in some ways the worst case for markets, because in worst case you simply have to wait. If not, then we get higher rates moving forward.
Yeah.
I mean, the data is still very unclear. At least we need more data points to determine whether or not it is, in fact, restrictive, I think, to the point.
Yeah, and is he going to clarify what metrics is the Fed going to look like when it comes to inflation? Now, is it still the PCE, which has largely been seen as the preferred gauge for the Fed, in really judging whether the Fed can actually bring inflation down to that 2% target? And what is he going to do? Like, how is he going to make this case about less forward guidance without the bond market thinking that he's just being not inflation fighting, evasive, and the like, right? So that's going to be the key challenge for him moving forward. Markets, though, I mean, obviously we have seen the Treasury markets move a little bit ahead of this as well. I mean, when it comes to yields, they were picking up higher for a second day. JGB yields are also a little bit elevated here this morning. So we're watching very closely. We're at a 520 handle for the U.S. 30-year yield. That's probably the one that's going to move the most if we see a bit of disappointment today.
Yeah, we are steeper in the Asian session as we go into that. Of course, we'll have to wait for London and New York, and then we get into, of course, what the market reaction will be as we get into that speech. So just something to watch. The MOVE Index, which is indicative, of course, of expectations here, has been gravitating lower. Right. Some of the things that have come up recently on the back of higher yields is perhaps a separate but related story is the gold price consolidating at 2046. Bitcoin is just coming off a little bit, 80,000. Separately, we are seeing this pickup in things like industrial metals. It was copper. It became iron ore, still is. And it's now showing up in the form of rebar prices, which is the Shanghai contract we're seeing on your screens. To the equity markets, you have CATL, Victory Giant, PCB maker. I think Citi was out cutting the price target there for the stock. It is one of the big drags on the Chinex index here today. And as far as that's concerned, yes, they have cut, of course, there on the profit miss coming through out of Victory Giant. Apart from that, CATL, and of course the big one is coming through on possibly at least $3.5 trillion in market cap is reported today. And of course, we're looking for CXMT, the first set of results there as a publicly listed company there.
Yeah, it looks to be pretty good in terms of the top line. So we'll see how things look for the chip space there moving forward next week. We're also counting down to India markets that are coming online pretty soon. Interesting what happened Thursday. There was a bit of a wobble, I guess you could call it there.
Yeah, the closing auction.
Basically, there was a brief plunge of 3% during that 20-minute closing auction on Thursday. So there is some concerns about liquidity and maybe possible manipulation during that window as well. So we'll investigate a little bit more. With Insight, it has coming up. Big guests coming up there as well. The likes of Raghuram Rajan and the World Bank Executive Director. This is Bloomberg.